Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is a free weekly newsletter. Market went for a dive on Friday. This is a chart of the S&P 500 on an hourly basis, so you can see the nice dive. We broke below that 1320 support line. We broke earlier the week, and then bounced back up, which stopped a lot of people out if they went short, and then broke down again, confirmed it. But notice all these big bounces in it. And the reason why we're having bounces in the market right now, and the reason why the market has been so slow lately, is because every time the market goes down, the Feds come in with some kind of help for the market, something to convince the market to bounce back up. Either talk of saving Fannie Mae and Freddie Mac, rate cuts, injecting liquidity, or anything that they want to do in order to prop the market back up. They will not let the market dive. They will not let the market just go. They will not let the market just do what it needs to do. This type of action, when the Fed steps in and basically takes the energy out of the downtrend, the sellers are still there, and the sellers are still selling. And the whole action, the whole exchange between the sellers and the buyers, the sellers coming out and the buyers coming in, is still happening. It's still going on. But because it's being throttled, because the Fed is supporting that kind of action, what happens is you have a sideways type of correction. Instead of having a large, deep type of trend, you have a very compact consolidation. So I'm having serious problems right now with trusting this trend that it's going to be a complete collapse because of that reason. The Fed is running out of ammunition, but I still think they have plenty to do. So we've been talking about this consolidation for quite a while, for the last few weeks. Excuse me, 1320, 1388. We talked about a closer one before. It was down to 1370, and we finally broke out of it, and we finally have a trend. All the moving averages are pointing down. All of them are below. The 21 is below the 50, and the 50 is below the 210. It all looks great. And it looks like we're going into a downtrend. But I would still be very cautious about it because the market can bounce at any point in time. And it did bounce on Friday. We did not have any panic selling. We did not have people running to the exit doors and trampling over each other. We had a very organized type of selling on Friday, which was great. And then we had a bounce towards the close. Let me show you the closer chart. And you can see a very, very nice profit-taking bounce into the close. As a matter of fact, on Friday, we came down, we gapped down, and then we rallied back up. Lots of buyers. And then we came down, and then around 3 o'clock, we had some kind of news that came out, and we rallied back. Those rallies are caused by short sellers that are scared to hold their shorts. They're really, really afraid of holding their shorts, especially over the weekend. And I think that's what's going on in the market right now, and that's why it's so difficult for the market to come down. How do you play this? Well, we are in a downtrend, obviously. Why? Because we're breaking support levels and we're going down. There's the NDX, NASDAQ 100. You can see basically the same thing. Wedge-shaped consolidation. We're breaking out of it towards the downside. But here's something that's really interesting. 1708 was support on NDX. If I go into 5-minute chart on this one, you can see that we rallied all the way back up. That's Friday. That's supposed to be a breakdown day. And on a breakdown day, we rally. The way to play this right now is not with individual stocks. I don't think so. Why? Because individual stocks are very scared. People are very, very scared of individual stocks. And you can get stopped in, stopped out, stopped in, stopped out very, very quickly because of these gap downs and rally back, because of these breaks of support and rally back. You can see break support, rally back, break resistance, come down. And that's even more prevalent when it comes to individual stocks. Individual stocks are completely confused right now. What I would do if I were you, I would focus on the indexes. You have the QQQQ. If I could type it correctly, it'd be great. If you want to short the NASDAQ, you know, it's very hard right now to pick individual stocks. I mean, we're doing it. We're doing okay with them. But make sure that you're picking the QQQQ. and you can basically join the trend on it by going short on it. And here's a daily chart on the QQQQ, and this one will mimic the NASDAQ 100, the top 100 stocks in the NASDAQ. That 41.97 is a great line to enter into. If it breaks the 41.97 again, this index will go down, or will keep going down. Be very careful with it, and don't hold it if it bounces back. Don't hold it if it goes back up. Spiders mimic the S&P 500. And same thing, also, this is an index that you can hold on the short side and take advantage of the market coming down. Diamonds. That's for the Dow Jones Industrial Average. Is it too late to enter? No, I don't think so. I think that it'll be better after it bounces. I think a better index would be the QQQQ, the Qs. What I'm looking for right now is I'm looking for them to bounce back up, confirm this downtrend, and then come back down again. And that's when we're really going to increase our position. That's when the short sellers are going to gain some confidence. That's when the Fed may run out of ammo, and that's what I'm looking for. Another option for you is to do the Ultra shares, and these are those are Pro shares. A QID, for example, mimics the NDX, but in an opposite way. It's an ultra short, and that's why this one goes up whenever the index comes down. And this is another one that we went long on, and it's working pretty well for us. But again, I'm not completely convinced about this downtrend quite yet, and I would suggest that you inch your way into it. This is the S&P 500 again. I'll show you the NDX, the NASDAQ 100. And you can see how we broke, came back, confirmed, came back, and now we're bouncing again. I think that it's going to take another day or two before we're really convinced about it, and we'll be able to take short. Anyway, I'm looking to add more of these ETFs into this free weekly newsletter in order to really help you out. I think a lot of people need help right now because you want to protect yourself against the market coming down. You want to protect yourself against the real estate market coming down and everything along those lines. And the only way that you're going to be able to do that is by making money on these moves. Instead of being on the losing side, switch that around and be on the winning side. That's what I suggest that you do. Anyway, that's all I have for tonight. Have a great week. Let's watch the market. If it starts going into a downtrend, you have the tools to take advantage of it. Have a great night. Take care.